Hi, everyone. Welcome back to our latest episode of The Growth Playbook with myself, Kim Clark, and my dad, Alan Bolio. Today's episode, we're going to be talking about some happenings in the economy that are worth taking note or are items that people are already taking note on, and we will share our perspective and thought process on them. So, Dad, really appreciate all the research and the time you put into looking into these topics and excited for today's episode.
Thanks, Kim. I'm glad to share some of this. Some of it's headline, some of it is not headline, but I think it's all important to our listeners and people viewing us in their planning, their thinking as we are into the second month of the new year. Uh, there's a lot of noise, so sometimes it helps us sort that through. One of the things that was noise that wasn't on the list of things we're going to talk about, for instance, is that Xi Jinping in China fired two leading generals in the military, which has happened before. He calls it rooting out corruption. Who knows? Uh, but what was caught my eye was that they put out in the military newspaper to the Chinese military that their loyalty should be to Xi Jinping, not to these generals. And I thought, well, that's interesting that you have to remind them that they're, are they worried? I mean, it's,
Yeah, if they're corrupt leaders, why would we be worried?
yeah. So a lot of fun stuff going on, but we'll stick to the U.S. economy for today anyways. Otherwise, we'll get into Australia and other fun things. But let's start off with the tried and true. U.S. industrial production ended the year at 1.3% above 2024. Hats off to ITR Economics. If memory serves me correctly, they forecast 1.4%, which means they nailed it. Go ITR, good, did a really good job on that. And if you want to keep up with their numerical forecast, that can be done. Go to their website. There are different ways to do that. We certainly want to make sure that we give credit to that forecast accuracy. It was nice. They are saying that the economy in GDP and industrial production will grow in 2024. 2024, yeah, that was an easy forecast. 2026.
Blast
Um,
from the past.
yeah, that's right. We nailed it. I think so too. It will be mild. That's the important word there. And why it will be mild is because of some leading indicator input. Manufacturing's up, and got this information from the St. Louis Fed. Job openings are down, which is interesting, and we're going to keep that in mind when we talk about the Federal Reserve Board in a minute. And wages are up, which is good for people, and it's more than the rate of inflation, which is good. But we still don't see the I don't know the right way to put it. I don't want to be hurting anybody's feelings, but the everyday person
Hmm.
uh, happy and going, this is all good. They're still like, this doesn't feel good. I'm not feeling like this is easy for me to live in this economic environment. And feelings don't necessarily result in economic impact, but it's certainly something to watch. Consumer confidence is a lousy economic indicator, but it can be that spending won't take much to take it offline or restaurants or whatever it happens to be. So I like watching what is going on with the everyday person as opposed to just the aggregate number. Retail sales can show a nice aggregate number, but as we've talked about, what you're selling and who you're selling to makes a difference. B2B is much different than B2C and all the rest of that. Um, on the leading indicator front, one of the ones that's down is the U.S. Leading indicator. The U.S. OECD leading indicator is down. That's not encouraging in any way. Uh, the one that is up and had a fantastic January was the ISM's PMI. I mean, it just jumped off the charts to a really impressive number. And as it did so, jumping to 52.6 from below 50, that means it's back into, all right, everything's good, we're going to go. And the news was the stock market responded positively, and different news sources that I read, I don't want to misallocate, but it's from either Wall Street Journal, Associated Press, Bloomberg, one of those guys was all excited about it. And I thought the old adage is 1 month does not a trend make is certainly important. And I looked at the history, and a strong month doesn't mean the next month is strong. It doesn't mean the next month is strong. It can be just you get aberrations. So it's just let's slow down on the excitement on the PMI and see what's going on. And also to ITR's credit, and go to them to continue to track this because I don't on a rate of change basis. The 112 rate of change went up, but the overall trend in that rate of change is not up. It's flat to, I would look at it, people look at X-rays differently. My view of that X-ray is that it's mildly negative in terms of the rate of change. So do not take the news and go, wow, these are great things. Take the news and go, I sure hope so, but I'm not ready to believe it yet because you'd be stepping off a bridge into the great unknown if you believe everything that you read. So be very careful about that. Inflation is going to be mild as we go forward through the first half of the year. Then it's going to pick up speed. That's a pretty common outlook. I certainly share that outlook. And most of that is because the dollar's got some weakening. The producer price index is going up. I actually read online that somebody was saying, well, the PPI is disconnected from the CPI now, so don't worry about that. And I'm going, that sounds like a classic piece of bad advice. There are times when it's true, but to take a times it's true and make it count on that this time, it's like that's dangerous because the cost of producing things finds its way into the selling price. And it's just not everybody's going to take a margin hit. Nobody's going to want to do profitless prosperity. Prices are going to go up, and the PPI is signaling that that will be the case. And you can also see people are concerned because when gold hit 5,000 and such, it was an incredible tell that people were worried about the dollar, people were worried about the economies of the world. Next day, silver plunged, and the headline was silver plunged, but it plunged 9% after going up more. So it gave up some ground, but it's still way above where it used to be. So the overall message is put things in context. And as you put things in context, it's proceed forward with your eyes open, but there's a bear in the woods. So make sure that you're wary about that bear and keeping your eyes open for the bear or the bear tracks and uh, be ready to be agile as you go forward, which is code for run like heck because that bear's after you. Um, Lastly, Kim, I want to talk about existing home sales. This is important to millions of Americans, and I get concerned about the press on this too.
Hmm.
Um, for instance, let me give you some numbers here. The price of an existing home, the news would say, fell, and it did at the end of the year to $405,000 from a high in June of $433,000. So it sounds like, that's a pretty good fall in prices. It's $28,000 less. But what they usually don't say is that it's normal for prices to fall from June to December. So you got to put it in context. This year fell by $28,000, which is a very normal seasonal decline. Last year it fell by $23,000. So, we had a little more decline this year. But the December price this year, $405,000, was above last year's December price of $403,000. So if you're a home buyer, you're going, it's the time of year that I buy that I really should be paying attention to because I'm not seeing this great slide in nationally in home prices. Because I'm a nerd, I dug a little deeper. Go, what does that mean to somebody's mortgage payment? Well, if you ignore PMI, insurance, and uh, taxes, because those will vary all over the place, you just get down to the mortgage and you go 10% down on the medium priced home. It saves you $178 a month.
Hmm.
The change from June to now, which is not nothing. But if you took the median priced home and figured that the home price has to be 25% of your monthly income, it means that your monthly income went, you could save something on your monthly income to be sure. I'm going to look for the actual number because I wrote it down here. Uh, you are going to be able to moved from making about $554,000 a year down to about $538,000 a year. So how many people out there make $538,000 a year, right? So on the median, doesn't mean a thing. It's really not. For the people that are making $200,000 a year, which is a lot of money for a lot of people, this doesn't help them at all.
Yeah.
This ignores a part of the population that is important to you and I, which is again, you got to be so careful of terms these days, and I try not to irritate anybody. Well, I do try some, but let's call them the people who work paycheck to paycheck. They're still falling behind. They're still in pain. They're still in debt. They still can't buy a house. Rents have come down a little bit, so they can breathe a little easier, but that's again national aggregate, depends on where you are. In so many states, it's just impossible to afford rent, let alone to buy a house. So in this country, when you look at the economy, the inequality is growing. I looked at this in preparation for today. The inequality gap, the income gap, the wealth gap, all growing.
Mm.
And as it's growing, it's uncomfortable and it's unsustainable because sooner or later that base that you need is going to be unhappy enough to cause some significant changes, whether it's significant changes to socialism, whether it's just I quit, whether it's I'm not going to put up with you anymore, whether it's a strong growth in union activity, whatever it happens to be, this growth in inequality is an issue. And maybe we can tackle it another time, but I looked at it by age, I looked at it by income, and I looked at it by wealth. And the group that's not getting wealthy as fast as they should are millennials.
Mm.
Millennials are the people coming of age that are looking for a way to get rich, and there is no easy path. They're going to gambling now, which they're doing legal gambling. I'm not talking about on Patriots, but I'm talking about on what's that website? There's a website now where you have an app on your phone where you can see somebody's projection of whether the stock's going to go up or whether this company is going to do that, whether this sports team is going to do that, and you can bet on it.
Mm.
And they're, day trading kind of thing in advance. And I mean, people are taking risks now because they feel like they're trapped. And I've kind of wandered away from the macroeconomic business point of view so that folks listening that have employees can say, this is what your folks are feeling. This is what they're living through. And a happy, stable workforce is not accidental. It's paramount to your success. Because without that, constant training, turnover, quality control, all the rest of that suffers. So if you're happy because you're making $500,000 a year and you figure everybody else might be happy, I'm here to tell you they're not. And it takes work, and it's going to take some change as we go forward. I'm not talking about dramatic social change. I'm talking about at the business level. You and I used to do that. It's at the business level. Each business can handle it and make a difference, um, and do quite well as you make a difference. Long sermon. I apologize for that, but the news
No.
got me. The news got me excited, and the housing thing got me going. This is of no real use to most people. So stop it, media, saying, "Hey, this is great news." People making $500,000 a year probably not really worried about getting a house unless they just have too much debt or too many kids in college. It's just silly.
Yeah, and I agree with all the points that you just brought up, and a few things that jump to mind are the roller coaster that I just heard, right? That's coming at civilians, entrepreneurs, millennials, whatever the case may be, from all different angles. Like, you should be feeling this way. You should be thinking this way. You should, like, this is good news. This is bad news. It's a roller coaster for all these people that are just trying to figure out, well, how come I feel the way that I feel? Should I not be feeling the way that I feel? Or the why me's could creep in, or it all causes some sort of an emotional response, which is partly why we have this show, is to look through it and be able to clear away that emotional response and truly acknowledged this is likely how you're feeling, and here's some advice on navigating your way through the current situations. Which some of the advice that I just heard was the at the business level, us taking more action and a more proactive approach to helping our employees through these varying times that we're going through. Recently on one of our episodes, you had recommended that every business consider a 4% wage increase year after year through the remainder of this decade. When you were talking about how wages had come up, was it near that 4% that you were talking about before?
Memory serves me correctly, it was 3.6, and with inflation at 2.7, that's good. But again, that's in the aggregate. And I've come to loathe aggregate numbers.
Hmm.
That's the strongest statement. I used to deal for 35 years, we dealt in the macro, and then once in a while the industry, but even then it's an aggregate. If you're in retail, you didn't get 3.6%,
Hmm.
but inflation was still 2.7%.
Right.
It really depends on what you were doing. And so it's easy to forget the people that are involved and the businesses that are involved, because that fellow that's running a chain of Piggly Wigglies, he's got an entirely different set of problems than PPG paints. I mean, it's just it's a real issue. This inflation and wage issue is a really important thing when you count on those people to be on the counter, to stock the shelves, to unload the truck, and you want to keep them happy and keep the business going while trying to maintain some margin because the food prices have been going up and people stop coming in to buy as much if they don't have as much money. I mean, that person's got a real problem on their hands. Uh, and it's a significant issue. So it goes back to what we talked about before, driving efficiencies, driving innovation, stop doing things you shouldn't do, stop selling things you don't need to sell, in all the rest of that. Because uh, for that person at Walmart, this is not easy. Um, Target, pick one. I'm not picking on Walmart. I have no problems with Walmart. We still go to Walmart. It's fine. Get me off on another rant. People, I don't go to Walmart. I go to Target. I go, what? Okay, good. Fine. If it's important to you to go where there's better carriages, go. But
One of the other things that you mentioned too, with the inequalities and maybe us taking that on as a subject in the future, I'd be curious. I'm trying to think of the right way to word it. From a regional standpoint, just knowing, so us in New England, knowing how hard it is for somebody making $100,000 a year to afford even a fixer-upper, two-bedroom, one bath, quarter acre lot, maybe even smaller type building at $100,000 a year is virtually impossible.
right,
Versus down in Texas, you can spend $250,000 in some locations in Texas, and you can get yourself a four-bedroom, three bath, and a large plot of land. So I'm just wondering how some of the differences by region might end up playing into migration patterns of the different income tiers that we are seeing grow, that you were just mentioning. It'd be an interesting thought exercise to go through. Where are we basically financially forcing millennials to go?
yeah, well, you're absolutely right. That would be interesting, and we can certainly do that because where you see aging graying populations, you have problems down the road. And where you have youth, you have potential down the road. And there are some states that are graying out. And Pennsylvania is one of the most populated states in the country, but it's graying out. I used to joke they need to start a lottery program where you get a one-way bus ticket to Florida. Congratulations, you're going on vacation. Not sure how you get back, but that becomes your problem. Because of the strain it puts on the economy in the future. In the meantime, uh, home prices here are very high compared to Texas for various reasons, but the as the population density diminishes as we go forward, home prices will eventually calm down, then they will go down, which puts a whole class of people who bought homes in New England
Mm,
in a lot of hurt in the future because that was their retirement was going to be their home, and all of a sudden now it's going away. We call that the depression, and that's
yeah.
going to be happening to a whole lot of people. Um, it if there was a single factor we could fix it, but because it's so intertwined and multifactorial, it becomes very difficult to fix. Extremely difficult to fix. It comes down again. I'm being repetitive, but to me, and because of the boards I'm on and the people I deal with, it comes down to what is the company going to do about it. We can't deal with it on a macro basis. We don't have the power, and I don't trust the government to do it on a macro basis. But what can we do in our own backyard with the people that work for us so we can make a difference for them? That's what it comes down to, right?
Yeah.
You can only do that.
I love that. And there's certainly a lot that from your small mom and pops all the way up businesses can do to help support. I mean, that was always something that you and I talked about was a stronger business in my mind translated to a stronger society because they have more ability to help support the local communities and varying things. So,
Right.
I
Look at
second that
Jack Stack.
wholeheartedly.
Yeah, Jack Stack with SRC is transforming, a part of the world and making a great future for people while running a very large set of companies. I mean, so this doesn't have to be small. This is the person who's running the thing, and their board and what their vision is. Um, it's all possible. It's all doable, but you have to want to.
Agreed. All right, so before we end, a quick short story because I think you'll get a chuckle out of it. How prominent this weakening of the US dollar is in our society's conversation. Chloe, for those of you listening in, my 15-year-old daughter, recently in a car ride said, Mom, I want to take all my money out of my bank account and I want to put it into gold because gold is safer than the US dollar. And I said, honey, I don't know if you're even going to get a flake of gold. You have $700 in your bank account right now. I don't know if that's something well, if they can't protect my money, then I need to protect my money. So I need to put it into gold. And I just thought it was so funny. Here's my little 15-year-old starting to venture out into the world of employment and concerned about her $600. But it just goes to show you that, I mean, if she's watching YouTube or whatever the case, hearing it at school, it's just that's how prominent these types of conversations are about the economic state of our country.
Yeah, there's a fragility developing because of the federal and state governments that don't have fiscal responsibility as their goal. My advice to my granddaughter, by the way, is keep the chickens. They'll do better than gold. You can't eat gold.
I'm not going to tell her that because then I'll end up with more chickens.
Okay, all right. Well, just keep it in mind.
Okay. Any closing thoughts you want to share with our audience before we depart for today?
Just if I may summarize, be careful of the news. Data points can be really encouraging one month and discouraging the next. Make sure you take the time to put everything in context if you're going to grab numbers like that. And remember, the person that's best able to make a difference in this world is you.
I love it. Thank you, everyone, for joining us for today's episode of the Growth Playbook, and we look forward to seeing you next week. Bye, Dad.
Bye, Kim.